following what we've seen happen to Baba, to Didi, and to education stocks, like equity investors are obviously a little bit traumatized. They are clearly adopting a sell first, ask questions later attitude. So you get a negative headline on Macao and everything tanks. So part of this may be a bit of an overreaction. And does the government really want to kill Macao's economy? Casinos typically account for about 40% of GDP. They employ about 1 in 7 people, huge amount of tax revenues. But on the other hand, the rationale for tolerating casinos has really reduced over the last few years. Steve Wynn and Sheldon Adelson were big Republican donors and advocates for a pro-China policy, but they clearly had zero influence during the Trump administration. And Sheldon Adelson passed away in January anyhow. Even on the economic side, punter numbers in Macao are down something like 80% during COVID. Macao's GDP halved last year. So the pain's already happened to some degree. So maybe they are comfortable with this being the new normal.
They are comfortable with this being the new normal. Which sector comes next in terms of the regulatory crackdown? Because we've just seen a series of segments and sectors being impacted. What's next?
Yeah, that's the million-dollar question. So, the regulatory crackdown has a broad set of ideological drivers: rule of law, dual circulation, common prosperity, family values, that give a broad sense of the range of sectors potentially at risk. But maybe the more important question is, we know what sectors are vulnerable, but what's the likely severity of a crackdown in any given sector? And the rule of thumb that I've been using for that and talking to clients about is basically, what's the counterweight? With computer games for teens, there's really no government priority, which is on the other side of the scales. There's no social or economic benefit. But if you look at tightening labor regulations on gig economy workers, it's much more balanced. Yes, they want to improve wages and conditions for workers, but they also know the gig economy is a crucial pressure valve for the labor market. So reforms in that area are likely to be much more moderate.